Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said millionaires don't need astrologers, but billionaires do. And so we begin. Today is Thursday, April 4th, 2024. Notably, today, initial jobless claims came out higher than expected, quite a bit higher than expected. And this is pretty interesting because, if you based your crystal ball rating on ADP from just yesterday, it looked like, well, everybody's getting jobs. And this report shows the opposite. Like I said, the ADP numbers, the joke is, yeah, there's 183,000 jobs and I have 10 of them. The idea being that, it can be a deceptive metric to be looking at. So the initial jobless claims last month, 212,000, expected 213, and the actual was 221. Now when we pull up a chart of the initial claims going back to the beginning of 2022, just to get an idea of where things were, where things are going. I mean, yeah, it looks like it's going higher. Is this groundbreaking? No, probably not. But I'll say it helps add a piece to the puzzle of where markets are. And as I've been saying, I think we've topped out and we're going to be heading down from here. And I think that it will, when we look back, I think this is that we're popping the AI bubble. Eventually the market has to wake up to when something is just has so much incredible speculative value to it. And that's what I think is going on here. I know it's not Friday, but I want to bring up the weekly chart of the S&P 500. Every bar here represents a week. And so if Friday the market bounces back, this won't look so dramatic. But right now it does look pretty dramatic. From this run we had since October of 2022, we've gone straight up. We've not seen, a solid red candle is, a formidable opponent to the bulls in markets. And so I'm still thinking this is a top here. Moving on to the daily chart, today was very interesting. I saw what was going on briefly in the morning and was thinking like, oh, okay, another bullish day. And then throughout the day, we had quite a drop in the S&P 500. Now, on Gareth Soloway's Trading the Close show, he mentions how volume really spiked into the sell-off, meaning the bigger players in the markets that control more money basically are selling aggressively into this. And he's been talking about that. He's been seeing some other things, some other patterns that indicate that basically the smart money is trying to get retail investors to be buying these dips and they're selling into it. And so is it a wise time to sell stocks? Yes, I think that it is. Again, no investment advice on this channel, just entertainment. Additionally, in the Qs, or the NASDAQ, very, very large, we call this an engulfing candle, where the top and the bottom are higher and lower than a lot of days before it. And it did engulf quite a lot of candles here. The bears won the day. We opened higher and the bears drove it down and we closed pretty low. Now, what's causing this? Is it yields are going up? Well, maybe, except for the fact that yields are going down at the same time. The 30-year Treasury yield, notably, is going down at the same time as the stocks are going down. And so that typically means to me a run to safety. You're selling your stocks and going into guaranteed returns in treasuries. That's what I see there. Now, I always gotta come to my friend HYT, high yield corporate. This is the smart money. This is, how valuable are the bonds that are higher risk in the economy? And this is still going sideways. This is not fearful yet. And I'm starting to wonder if this market is waiting. I'm starting to wonder if this whole thing is going to be driven by a stock market sell-off, that the recession actually happens because of a sell-off. And I mean, if that's the case, yeah, HYT can follow the S&P 500. Usually I like to see weakness in the high yield corporate as being the smart money that leads the stock market lower, but it can certainly go both ways. It's possible that we have a stock sell-off and then having high yield corporate see, okay, yeah, there's risk here, and selling off. Now, on a shorter term perspective, moving on to the fear and greed index, I was talking about over the past few days, we went 2 days ago, we went down from something like 73 to 63, and then yesterday we went from 63 to 62. And I was like, oh, well, I thought this was going to accelerate to the downside. What happened? Well, guess what? Today it did happen. We were at 64, yesterday in the greed index, and we dropped all the way to 49. That's a very big drop. And so, markets, they don't tend to be neutral in my experience for very long. I don't think we stay neutral. Typically, we're either greedy or fearful. This, to me, is showing, yes, we're headed towards the fear. And then in the VIX, equally, we obviously saw a pretty, as expected, pop in the VIX going up. This certainly can get worse before it gets better. If we have a continued sell-off across markets from today's movement, the VIX will definitely be going up higher and higher from here. So overall, I am happy on days like these. I'm on the right side of things. I have, if you've seen my previous videos, I'm 40% in long treasury bonds, which went up pretty good today, along with 5% of my portfolio shorting the NASDAQ and semiconductors, and that also went up today. So while the stock market's going down, I'm performing well on a day like today. Can it go against me the next day and the next day? Yes, it can. Will it? Of course not. I'm the guy with crystal ball. And that's all I have for you for today's show. I hope you enjoyed it, and thank you for watching. Robschild.